the charts are whispering a new trend. And somewhere in the background, a critical mechanism just ground to a halt. What is happening with Shiba Inu? The burn rate, the very engine of its deflationary future, has just suffered a catastrophic 62% collapse, plunging to a new, worrying low. This is not just a dip, it is a dark sign for Shiba Inu's future. Let's break it down. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The concept of the burn rate is central to the Shiba Inu ecosystem, representing the permanent removal of tokens from the circulating supply. This mechanism was designed to introduce scarcity, theoretically driving up the value of the remaining tokens over time. The introduction of the Layer 2 solution, Shibarium, was heralded as the ultimate accelerator for this process. As per on-chain data, Shibarium was designed to automatically burn Shiba Inu tokens through a portion of its transaction fees, creating a systematic and continuous deflationary pressure. The community's hope was that high transaction volume on Shibarium would translate directly into a massive, sustained token burn, paving the way for significant price appreciation. This expectation set a high bar for the project, making any failure in the burn mechanism a major cause for concern. The current situation, where the burn rate has not only stagnated but actively collapsed, directly challenges the core narrative of Shiba Inu future. The market is now forced to confront the reality that the deflationary promise, once a source of immense optimism, is currently failing to materialize at the required scale. This is why the current event is not merely a statistical anomaly, but a fundamental crisis of confidence in the project's economic model. The main news is stark and undeniable. The Shiba Inu burn rate has plummeted by a staggering 62.96% in the last 24 hours. This collapse has driven the total number of tokens burned in a single day to a worrying new low of just 69,420 Shiba Inu. The previous day saw 187,420 tokens removed from circulation, a figure that was already considered low. This dramatic drop signifies a near-total cessation of the active burning mechanisms. Sources suggest that the primary cause of this failure is the continued low adoption and transaction volume on the Shibarium network. The automated burn mechanism, which relies on a consistent flow of gas fees from network activity, is effectively starved of fuel. While the weekly burn rate shows a total of 54,584,068 Shiba Inu tokens removed, this still represents a 10.11% drop over the 7-day period, confirming a sustained downward trend. The sheer magnitude of the daily collapse has sent a clear signal to the market that the systematic deflationary efforts are not functioning as intended. This is compounded by the fact that the total value locked on Shibarium remains weak, hovering around $2.47 million, a figure that analysts note is insufficient for meaningful burns. The market's reaction to the burn rate collapse has been one of quiet but persistent weakness. At the time of this report, Shiba Inu is trading at 837 units. This price point reflects a consolidation near recent lows, as the broader crypto market remains in a mild bearish phase following a weeks-long sell-off that began in early October. The 24-hour trading volume has settled at approximately $105 million, a modest figure that underscores the current lack of speculative interest. The market capitalization stands at approximately $4.97 billion. While the price decline in the last 24 hours has been less than 1%, the more significant reaction is the failure to rebound. Analysts note that in the past, even minor burn rate spikes could trigger a short-lived rally, but the current collapse has been met with a shrug of indifference from major investors. The lack of a strong price reaction to such fundamentally negative news is, in itself, a bearish signal, indicating a loss of confidence in the token's ability to defy broader market trends based on its internal tokenomics. The price action is trapped in a narrow range, with the burn rate collapse removing one of the most compelling arguments for a bullish breakout. On-chain data provides a deeper, more technical view of the burn rate crisis. The core issue is the low number of transactions on Shibarium, the Layer 2 network intended to be the engine of the burn. While the network has processed millions of transactions, the daily count has not maintained the necessary volume to generate substantial bone gas fees, which are then converted and used to burn Shiba Inu. Technical evidence shows that the total value locked on Shibarium is critically low, currently at $2.47 million, a figure that has seen a 1% monthly drop, signaling weak adoption and a lack of sticky capital. This low total value locked directly correlates with the burn rate collapse, as fewer users and less capital mean fewer transactions and, consequently, fewer burns. Furthermore, community trackers show that the majority of the burns that do occur are often manual, community-driven efforts rather than the automated systemic burns from Shibarium. This reliance on voluntary action highlights the structural flaw in the current burn process. Technical analysis of the Shiba Inu price chart shows the token consolidating near a critical support level, with the relative strength index hovering in the neutral zone. The on-chain evidence is clear. The burn mechanism is currently a non-factor in the token's supply dynamics. Analysts are now openly questioning the long-term viability of the Shiba Inu deflationary model in its current form. The implication of a 62% burn rate collapse is that the token's supply reduction is effectively negligible, meaning the path to a higher price through scarcity is now significantly longer and more uncertain. Expert commentary suggests that the current burn rate would take hundreds, if not thousands of years, to make a meaningful dent in the massive circulating supply. This realization is the darkest sign yet, because it undermines the primary bullish thesis for Shiba Inu. The core problem, as analysts note, is the lack of a compelling use case for Shibarium that would drive mass adoption and, by extension, high transaction volume. The current low total value locked and transaction count suggests that the Layer 2 solution is failing to attract developers and users away from more established or more active chains. The implication for investors is a necessary reevaluation of their investment thesis. If the burn rate cannot be reliably sustained by network utility, then the token's value must be driven by other factors, such as speculative interest or community hype. The analysis points to a critical need for the development team to introduce a killer app or a significant high-volume utility to the Shibarium network to reignite the burn and restore confidence in the deflationary narrative. The community's reaction to the burn rate collapse has been a mix of frustration, denial, and renewed calls for action. On social media platforms, community trackers show a significant increase in posts expressing disappointment, with many questioning the effectiveness of Shibarium's current design. Developer hints, while often cryptic, have focused on upcoming upgrades and partnerships intended to boost network activity. The lead developer, Kusama, has previously emphasized that the burn rate is a long-term process and that the focus should remain on building utility. However, the current data suggests that the building utility phase is not translating into the expected economic outcome. Community forums show a growing sentiment that the developers need to implement a more aggressive, perhaps manual, burn mechanism in the short term to bridge the gap until organic utility takes hold. This pushback highlights a disconnect between the developer's long-term, utility-focused vision and the community's desire for immediate, tangible results in the form of a reduced supply. The most dedicated members are attempting to organize new, voluntary burn events, but these efforts are often insufficient to counteract the systemic lack of automated burns. The forecast for Shiba Inu is now heavily dependent on two critical factors: the recovery of the burn rate and the broader crypto market's liquidity. Short-term, analysts predict that Shiba Inu will likely continue to consolidate in its current range, with the potential for a slight dip if the broader market experiences further selling pressure. The immediate focus will be on the next weekly burn report. A continued drop will likely trigger a minor sell-off. What to watch is the institutional forecast, which suggests a stealth quantitative easing environment, a transition from balance sheet runoff to net injection, that could support crypto markets until April 2026. If this macro liquidity boost materializes, it could provide a temporary lift to Shiba Inu price, regardless of the burn rate. Long-term, the forecast remains bullish only if the Shibarium utility dramatically increases. The price prediction for the end of 2025 suggests a potential change of 17.20%, reaching a price of 1,019 units. For Shiba Inu to achieve significant price targets, the burn rate must become a systemic, multi-trillion token event, driven by a high-volume application on Shibarium. A balanced opinion on the current situation must acknowledge both the significant risks and the underlying potential. The primary risk is the structural failure of the deflationary model. The 62% burn rate collapse is a clear red flag that the current utility of Shibarium is insufficient to justify the token's key long-term scarcity narrative. This risk is compounded by the broader market's mild bearish phase, which makes speculative rallies less likely. Investors must be cautious of the narrative that every burn counts, as the current rate is mathematically insignificant against the total supply. The neutral insight is that Shiba Inu remains a highly community-driven project with a dedicated development team. The potential for a sudden, aggressive pivot, such as a manual, one-time burn event or the launch of a major utility application, remains a possibility that could instantly change the narrative. However, relying on potential future events is a high-risk strategy. The cautionary point is that the token's price is currently being driven by external market forces and technical support levels, not by its internal tokenomics. The current burn rate collapse serves as a crucial reminder that fundamental utility, not just hype, is required for sustained, long-term value appreciation. So, the engine of Shiba Inu's future, the burn mechanism, is sputtering. A 62% crash to new lows is a dark sign that the utility-driven dream is currently on life support. The market is waiting, the community is restless, and the developers are under pressure to deliver a killer app for Shibarium. The coming weeks will be critical. Will Shiba Inu find the fuel to reignite the burn, or will this collapse mark the beginning of a long, cold winter for the token? We will continue to track every move. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.